use your time to explain some of those positions.
Democrats handed the IRS an $80 billion raise last year. Taxpayers are now asked in this budget to hand the IRS another $43.2 billion. I have to ask, is that a joke? After a 2-year inflation crisis that has cost American workers more than 2 months of pay, families need every penny they can get. But they can't even get their own refunds back because of the historic backlog at the IRS. And they can't get through to a human at the agency because of the terrible customer service.
Economic advisors, the Federal Reserve, and the Treasury. Labor force participation declined. It has been stubborn, largely because of the pandemic and the retirement of the baby boomers. That has been transformational in our economy. But rebuilding the economy from the bottom up and the middle out has been the president's push, and we agree with him on this side. The budget that he released yesterday was important, and now we have a blueprint, and we look forward to hearing what the other side has to say when, at some point, they might lay out their budget plan.
The president's proposals prioritize growth-enhancing investments that will build on the economic progress we've made, along with significant tax reforms that will substantially reduce the deficit, improve our long-run fiscal outlook, and reduce fiscal risks. Over the past 2 years, the United States has experienced an historic economic recovery. Our administration's top economic priority remains bringing down inflation. We've seen some moderation in headline inflation, but more work needs to be done. Our administration will continue to build on the actions we've taken to expand supply and provide cost relief in areas like energy and healthcare. These actions have made a meaningful difference for American families. Our proposed budget builds on our economic progress by making smart, fiscally responsible investments. And these investments would be more than fully paid for by requiring corporations and the wealthiest to pay their fair share. On the spending side, we suggest additional investments to boost our long-term growth potential. This includes improving the availability of high-quality childcare, providing free and universal preschool, and boosting the supply of affordable housing. We also propose restoring the child tax credit and earned income tax credit expansions that were enacted in 2021 but have since expired. Importantly, with the proposed tax reforms, we estimate that this budget will deliver deficit reduction of nearly $3 trillion over the next 10 years. In my assessment and those of economists across the board, a default on our debt would trigger an economic and financial catastrophe. I urge all members of Congress to come together to address the debt limit without conditions and without waiting until the last minute.
My concern is when you look—
You mentioned Silicon Valley Bank. There are recent developments that concern a few banks that I'm monitoring very carefully, and when banks experience financial losses, it is and should be a matter of concern.
to explain, we hope to see more of you here before our committee.
As you know, I've asked Congress to raise or suspend the debt limit. Since 1789, the United States has always paid its bills on time, and it must continue to do so. In my assessment and those of economists across the board, a default on our debt would trigger an economic and financial catastrophe. I urge all members—
Bring some very concise questions.
First, let me say that the strategic operating plan that we've promised to deliver, we will deliver in the
And you'll make that
coming
public
weeks.
to us.
Yes, it will be provided to you.
Thank you.
In the coming weeks.
Let me ask you, I'm hoping—
You already got $80 billion for the IRS. Now you want $43.2 billion more, all without explaining what will be done with the first.
Madam Secretary, thank you for your—
Prioritization is simply not paying all of the government's bills when they come due. That is something we have never done since 1789, and that really is just default by another name.
This is her third tour of duty at the White House, and she previously served as Dean of the Princeton School of Public and International Affairs.
Our Secretary of the Treasury, Secretary Yellen, is closely tracking the developments with the Silicon Valley Bank. What I will emphasize as well is that our banking system is in a fundamentally different place than it was, a decade ago, and that the reforms that were put into place back then really provide the kind of resilience that we'd like to see. So we have every faith in our regulators, the bank regulators, those who provide the guardrails and are safeguarding are closely watching and are prepared to use the tools that they need. The FDIC stepped in very quickly here. And that's what they were doing, was protecting the deposits of those up to $250,000, and then they have a way to unwind the rest. Our banking system is fundamentally different because of the changes that we put in place in 2008. For example, they have to hold more capital. They undergo stress tests. So we know that we had to build more resilience into our banking system, which allows it to withstand these kinds of shocks. So I do have faith that we have the tools for this sector and for our regulators to be able to absorb. But this is what we know today, but we do know that our banking system is in a fundamentally different place.